Hello, everyone. Today I want to come in and talk about how to listen to what price action is telling you. Because if you do so, you can avoid losses, you can make better decisions, and you can execute better with your model. More often than not, we do some form of analysis and forecasting of what we expect price to do. We form a bias coming into the session, regardless of what you trade and what time you trade. And oftentimes what happens is we end up hyperfixating on that bias, regardless of what price action is indicating. To begin, let me show you this overnight forecast / analysis that I posted on my X last night at 1:28 a.m. So just before we're heading into the London session. So we had this buy side, which is also the all-time highs. And we had sell side here. And this was also the high of the daily inefficiency, which I'll show you in a bit. But here, seeing how on the 15-minute chart, seeing the bodies close below the new week opening gap, I wanted to see price break lower and sweep the sell side and use that daily inefficiency as support with the body staying in the upper half to move higher and ultimately work its way above the new week opening gap and target the buy side. We've been at all-time highs. Price has been extremely bullish on the higher time frames. So this narrative aligns with that as well. Last night, this is what I wanted to see, and this was just a forecast and somewhat of an overview of what I expected for price to do. If you go into the 15-minute chart here, this is that same buy side, and I tweeted that at 1:28, so just before this 1:30 candle formed. And we can see how the bodies are respecting the low of the new week opening gap. They broke lower and took out the sell side right at London during the London session, dug into that daily inefficiency, which is annotated here in the gray. And these are the gradient levels that I've broken the inefficiency into. So you can see that the bodies were using that upper quadrant, just laying on top of that there. And we formed some pre-session sell side right at 8:30 with the CPI numbers released as well. We had clean buy side form here in the pre-session. This is all prior to New York open, so London and pre-session equal highs there. And then right at 9:30 open, let me go to the 1 minute again. So at 9:30 open, price breaks lower. It had already swept that sell side that I annotated in the overnight analysis, which is essentially this high of the daily inefficiency. But price broke lower and rallied, right? Left this sell side intact and it moved higher. This is where it gets a bit tricky. We can see how price rallied higher and continued to show strength in the first 15 minutes of the AM session. Now remember, I came into this session with the idea that I wanted to see price get above the new week opening gap and draw to this buy side here. Okay. Additionally, if you're not familiar with my model, I only execute in the 950 to 1010 macro. Okay. So I don't permit myself at the moment to execute outside this window. So any of this, I'm simply tape reading and just observing of what price is doing. So seeing this move here and seeing the body, seeing this candlestick at 9:45 wick into the new week opening gap, which is also the end of that first 15-minute candle. So the first 15-minute candle could not get into the new week opening gap. And this 1 minute candle here failed to reach that. And we can see the displacement lower, the strong break lower that we see here, take place right after wicking here. That reaction off of the new week opening gap low. That is a signature in price showing weakness. These are things that you have to keep in mind. And I would argue that they take precedence over whatever bias that you came into the market with. So I personally trade in the direction of the midnight open I had a draw. I anticipated a draw to this buy side coming into the AM session. However, seeing this type of reaction and then seeing this displacement, I immediately knew that, okay, price is showing weakness here. Although it was showing strength for the first 15 minutes, the bodies were respecting the upper quadrant of that inefficiency on the daily chart. Price couldn't even reach to that sell side, and price had no problem displacing through the high of this inefficiency on the daily chart. It formed the first presentation fair value gap, and at this point in time, it was simply a breakaway gap, showing that price was very strong. At this point in time, I was expecting my bias to hold correct. It hadn't been disproved yet. But seeing this type of reaction, I have to take a step back and think, because if price is going to be drawing to this level here, it should not have any problem cutting right through the new week opening gap, getting into the upper half of it, closing above the midnight open price and the high of the new week opening gap, and continuing displacement higher, using that as support essentially to move higher and spring up. If I did not read this signature and price action correctly, and had I stuck with that initial bias of expecting bullishness, despite seeing this heaviness in price here, this likely would have been an entry for me to go long. In theory, had I stuck with my bias. Price uses the first presentation fair value gap as support to move higher, closes above this inversion fair value gap, and now I would in theory expect that to offer support to move higher. However, because price showed this reaction and had this break lower, I immediately took a step back and allowed price to show me if it can get back above here again. And only then would I consider that bullish bias once again in this session, especially with this sell side from pre-session still intact. I did not feel confident going long here. If price wicked into the new week opening gap here and then maybe had a closure below, but the next candle opened and it was able to cut right through, that would have been a different story. However, seeing this heaviness lower, I had to abandon that idea. You have to take into account what price is showing you, and you can only learn this through consistently tape reading. When I first started, I would have not paid attention to this and read it the way I did today. But I am very glad that I have over time developed the ability to pick up on these signatures and price action in real time and make decisions very quickly based off of that. Now, seeing this, I could have gone short. However, I also did not do that, and I just chose to tape read today. Price displaced higher than this inversion fair value gap, but if we take a look at this wick, we can see the body this candle just wicks into the consequent encroachment of this wick and fails to get above that, showing heaviness. And the reason you want to use this wick is because whenever there is a prominent wick close to an inefficiency like a fair value gap, you want to take that wick over the fair value gap. We have this SIBI being used as inversion, but we have this wick which would take precedence over this inefficiency as taught by ICT. So seeing that, this would have been a perfect opportunity to go short as it's still indicating heaviness in the marketplace. There's also this inversion fair value gap here if you didn't want to use this wick. And you can clearly see that it fails to get into the upper half of that. Right? These up close candles here, that's a bearish order block. This is the first one that's prominent. You can use that as a singular bearish order block as well. And the bodies are remaining in the lower half, not closing above the mean threshold of it. Furthermore, a confluence that you can have added to see how price is currently heavy at this point in time. So seeing all these signatures in price action, you have to be able to get in line with them and be able to read them. And whenever what you're anticipating is aligned with that, only then should you execute. At this point in time, I could have switched my bias and gone short here. However, I chose to simply not engage after seeing this reaction because although there was a pool of sell-side liquidity, I often use the midnight open in my model. And because price is below midnight open, in relation to that, it's still in a relative discount. So I just chose not to engage and observe. But because I observed and I was able to read what price action was showing me, I was able to avoid this loss. And oftentimes, we don't have a problem with finding winning trades. We end up giving back what we win in executions with low probability setups. This is one of the best ways that you can avoid participating in setups that are not in your favor by reading what price is showing you. Price will tell you exactly what it's trying to do. It's going to tip its hand to you before it actually makes the move. And the best way to get better at reading these signatures in price action is simply through tape reading and practicing over time in demo. I hope this was helpful and you learned something today. Please leave a like and comment below if you did. Thank you guys for watching, and I'll see you next time.